It's Forex Gist, it's Forex Trading Secrets. It's Forex Gist, it's Forex Trading Secrets. I quickly want to share with you how to do a top-down analysis, and I want to share with you what moves the market, because that is what is important. Knowing the direction and knowing where the market is attracted towards. It's just like placing a magnet at one end, and what it attracts to it. It attracts to it the magnetic materials. So as in this case, what makes the market to move is inefficiency or liquidity. So I'll go on to break this down. Okay, now liquidity is like an area where you see two relative equal lows. All right, you see relative equal lows, and it might be 2 times, it might be 3 times. It keep going there, and then it stops. Let me show you a very good example right here. If you can see where my hand is, right here. Okay, right there. That is liquidity. Yeah, so that is liquidity. So right there, there's liquidity right there. Sorry about this. And then right here again, you see same thing, liquidity. So you see, and then so in as much as it has come down, it has come up here, and then it went down, and then it went back up there again, and then it's retracing back. People tend to put their stop losses right there. That's a buy stop. They put it right there, and this retraced a little bit and went there and took them out before going down. Now that is the concept of liquidity. So when we see this, then we are sure that this thing is going to move up a little bit more. But why are we sure that this stuff is going to go towards a particular direction at a particular point in time? We see an inefficiency. So I want you to kind of look at that place, and then you will see an inefficiency right there. You see that? So look at this place where this blue stuff is. Just take a very good look at that. You see, this is an inefficiency right here. This candle moved down so quickly, and then there was no time for it to really retrace. And so right there where it moves down, this is a very good inefficiency. And so we expect the trades to run into it. All right, we expect the trades to run into it. Just like it happened here at the left hand side. You can see this long candle, this bearish candle, how it moves down so quickly and without tails. You get it? And then it left this middle right here. So this is called an imbalance or an inefficiency. And then while it's moved down a little bit, it's rallied up quickly to fill the imbalance, and quickly it moves down. So this is what, when an imbalance is filled, we expect the market to turn in the other direction. So that is what exactly happened here, and then it turned in this other direction. And then for the notes, I think you should note that whenever you are having this kind of a setup, and whenever the market rallies up again into this, it's going to go all the way down again. It's going to move in the opposite direction. So let's go back to the right hand side so that we can see what happened. What happened right there. Let me just kind of bring this together so you can see the moment this came up to it, it retraced back up to it, and then it capsided straight straight down, capsided. And here is another one, trace back to it. Now here it formed liquidity. Now this is a kind of a trap. People begin to think that this place is so strong, oh, it's so strong, it's so strong, and then people begin to put their stop losses right at that point, where the blue line, where this blue horizontal line is. So they begin to put their stop losses there. Look at what happened. It traded down a little bit, and then it went boom, and then it took them all out, and then it went down. So it traded right into this inefficiency at the left hand side, this red candle right here. It traded right into it, and then boom, it moved down. So that is actually the concept of liquidity and inefficiency. So quickly to show you what played today, we are on the daily time frame. And we know that this is a bearish market, and then it retraces up, and then it goes back in its direction. So right here we are having this move, this candle that went up there to mitigate this inefficiency, though it didn't close it. So it moved down, and then there's this red candle that is coming down all the way, and then look at this candle, and then a green candle quickly moved. That was on Monday. This green candle formed, and then on Tuesday this pin bar formed, and then that's a spinning bar, right, formed, and then the next day again another spinning bar, and another spinning candle formed again, and then I knew that we were going to have this market move down, and then on Wednesday we had this candle come down, and then again the Thursday we have this candle come down, right? So that is how, when I saw this spinning candle, I placed my trade, because I knew definitely it was going to go down. I placed my trade, I placed my sell right there, because the moment that formed, it kept rejecting from a particular point, and then when this one went up to it, we were ready to go down. So quickly, I want you to see what happened on the 15 minutes. Yep. So on the 15 minutes, this is how it is right there. So you see that in the 15 minutes, I want us to go to the left hand side and see what's happened. So let me just bring this together so we can see clearly. So we can see how that it started consolidating at this point. But firstly, there was running out of liquidity. Look at this move. And then it's rallied up, ran out these stops. These are relative equal highs. It ran them up quickly, and then here it started to consolidate. And so we are waiting for the candle we are waiting for a bullish move that will go up to this one, and then so here it moved up to it, and the moment it moved up to it, I was ready to go in for my sell, and then I moved in for a sell, and then we have it going all the way down. So this is just how it works. And nothing more. That's just how it works. So let's see how this plays. So we're going to see how it played. So you watch the move. Boom. That was like a spike. Look at that. how it quickly took out the liquidity, and then it started to consolidate on Monday, Tuesday. It started consolidating. Look at that. So it's still consolidating. That is on Monday. So I just wanted to watch to see what happened, and then it's moving into the Tuesday, still consolidating. Look at all those moves. So, well, I was in for a sell, and I just remained there because I knew it was going to go down. Okay, so all these were just happening. Why were they happening? Liquidity. It was trying to accumulate liquidity. Buy stops all above this place. Sell stops all above this place. So it came right in, and then it took out all the sell stops right here. I mean the stop losses right here. And then it moved up and took out these guys up there. And as if there's not enough, it went more into it, reaching more into it. And then here we knew we were ready to move down. Okay, so that was where I knew we were ready to move down. And then it was time to go in for a good sale. And it kept on, still, consolidating, creating more liquidity and getting more people fidgeting, getting people confused, getting people scared, thinking, oh, it's going to take me out, so where's it going to go, and all that. And people would have been, guys would have been fidgeting, not knowing what's going to happen. There was no need to really fidget, because when you see this happen, when it run up to that up close candle, we should be expecting it to collapse, to go bearish. So that's exactly what is happening right there. Okay, that's exactly what is happening right there. So look at that. Look at that. It came down, took liquidity. Now that is the concept of liquidity. It came down, took liquidity, and then it rallied up a little bit. And right there, we are expecting a good capsizing, a real good move downwards. Yes, that is it. So you see, it's going real down now. It has done, it has violated all the stop losses, all the buy stops up above there, and then all the sell stops right down here, and then it was ready for it to move down, and then it just kept coming down. Just kept coming down. Look at that. Look at that. At that point, it was also trying to get people more confused. People have been swaying and thinking, is it going up? Is it coming down? Whoa, it's going down. It's going down. Why am I so sure that it's going down? Because there is an inefficiency below that is going to be filled. Actually, where it is actually bouncing from, it's not there's no inefficiency there, even though there's another block. So that doesn't really validate that it's going to go all the way up yet. So it's still going to go to fill the inefficiency below. So this actually was what happened. This was what happened in the trade. So that was it, guys. That's what it, guys. Let's take you back to the daily time frame. So because I want to show you the inefficiency on the left hand side. Let's show you the inefficiency on the left hand side. So let's go back to the daily. So here we are at the daily. So right here, it's a kind of Okay, so we see right here that there is an inefficiency. You see this green candle right here that moved up? There is an inefficiency right there. See this pin bar, this little pin bar. Okay, it has just a little tail at the top. Okay, and there are no other tails. This next candle here, this green candle that forms here, it didn't really create a tail to cover up the inefficiency. So there is still an inefficiency right there, and so that is what it keeps trying to come over to complete. So even when this one came here and formed right there, it didn't cover the inefficiency. I want you to see that it didn't cover, even when this one came, it didn't cover the inefficiency. And so even though it looked like another block, the inefficiency was not covered, and this one came and still didn't cover the inefficiency. This does not have an inefficiency. So even though a trade came into it and kind of rallied up and all that, it's just trying to create liquidity. That's all it's trying to create, and it is going to be violated. It's going to violate every one of these tails because there are people's stop losses right there. There are and sell stops right there. There are sell stops right there. People's stop losses are actually sell stops. So they are actually all right there. So guys, this is just how the trading goes. This is our mindset when we take our trade. So it's Forex Trading Secrets, it's Forex Gist, guys. I hope you will subscribe to my channel, and we will, together be looking to other currency pairs. And if you have a question, please do not forget to leave a comment. Do not forget to leave a comment. And if there is anything you want me to teach you, any topic you want me to share on, kindly just leave a question there. Just leave a comment. Tell me what you want me to speak on, and I will speak on it. If you leave a question on my comment section, I am sure to answer you. I am sure to reply. So guys, it's Forex Trading Secrets, it's Forex Gist. Please leave a like for me, subscribe to my channel, please give me a follow. Thank you so very much. Until I come your way again, I remain yours, Forex Gist, Forex Trading Secrets. Peace out.